right, guys. Good evening, good evening, good evening. I just want to verify if you guys can hear me, see me, that'd be great. I'm going to share with you guys today the strategy that got me out of my predicament. And I was in a pretty crappy predicament. My parents came to Canada in the 1970s, and my parents were both educated, but yet I was, and they were financially illiterate. This is a very prevalent thing throughout society. So when I graduated university, already having lived in that environment where everything was always a little bit tough. We always had enough, but we never had extra. And I'm not complaining at all. It's not that I'm complaining. All I'm saying is it could have been far better. My parents could have done better. It could have led a better life for me and my brothers had they had financial literacy. And this financial literacy is so prevalent throughout society. People don't understand the basics of how money works. And the basics to me are pretty simple in one sense that it's pretty simple in the end of the day. Either you can trade your time in for money, or you can let your money work for you. That's kind of the coin you've got to put yourself in. So I'm going to show you today, guys, the strategy that I used that allowed me to pay off my student loans and acquire a big enough real estate portfolio where I didn't have to work ever again. And I was able to start this company because I was in a financial position to do so. Anyone can do this. But you have to be willing to put in the time and the effort and understanding how it works, just like anything else. So I used this strategy to acquire my real estate over the years, okay? Now, I'm going to jump into it, guys. We are at 8 o'clock exactly, so I'm going to get right into it. And if you have any questions, please ask me. Don't be a shy group, okay? All right, this is going to be posted to replay. We understand that not a lot of people can make it at this time. Now, this is meant for informational purposes only. Do not take this as financial advice, okay? Please understand that. This is for informational purposes only. I'm going to show you what I do, why it works for me. You have to make sure it makes sense for you. All right. So next 30 minutes or less, I'm going to show you a whole new way to create cash flow, which 99.9% of people will never even know in their entire life. Never. Like you could literally take 1,000 people off the street and say, do you know this even existed? Be like, nope, didn't even know it existed. I think if more people knew this existed, far more people would be doing it, okay? But that, the level of knowledge around options trading and the manner that we do it here at Theta is very, very limited, okay? So it takes me about 30 minutes a day to trade. I can do it on my phone anywhere in the world. And you don't really need an investment experience, prior investment experience, or knowledge. Most of the people that actually, that I've taught over the years, and we decided to open this company, by the way, in 2019. And before 2019, I had taught like 50 to 100 friends and family just because I love doing it, because it changed my life. And that showed me there that you do not need experience. I taught people from all walks of life. And people who had never even seen what a finance course was like, never went to university for finance or economics, and that's not necessary. Your ability to understand and learn and your desire is what is necessary. All right. So who's Theta Trading? Myself and Matthew Todman, we founded this company in 2019. We've got about 1,400 members across the world. So we started this company in 2019 with one singular purpose, which was to give people the financial literacy they need to succeed and get themselves and their families to a better life. This is the exact education I would have wanted when I first started investing 25 years ago, when I didn't know what I was doing, because I had to learn this on my own. It was very painful and expensive. And all I'm trying to show people is, look, here's a legitimate strategy that you can use while you have a job, while you're working, while you're running a business, while you got a busy family life. Use the proceeds to buy more assets, or one day you can retire off it, okay? So I'm going to show you exactly how the Theta strategy works and how I'm able to live life on my terms. So I told you a bit about my background, guys. I went to U of T. I graduated university, started working, and I was thinking, oh my God, I'm going to be stuck working forever. It's not what I wanted to do. I loved working, in finance. That's not the point. But I always want to do something for myself. And I'm thinking, how do I get out of this? We had 3 young kids at the time. And like I said, I was using the strategy. And I'd acquired about a dozen properties by then, and I had a large enough trading account. One day I came home to my wife and I said, hey, guess what? I'm never, ever going back to work for somebody in my life again. And it really felt really good. That was about 10 years ago or so. But I wouldn't have been in that position had I not figured this out. So I'm going to show you the strategy, see if it makes sense to you. We'll go from there, okay? And I'll show you why returns actually matter, okay? This is a simple calculation. You look at 100,000, 7% a year, 20 years, you have 400,000. Pretty good. Okay. 100,000 at 14%, 1.6 million. Okay. Now you take the same 100,000, you times it by 21% a year, and you got 6.4 million. And this goes back to Albert Einstein's quote, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Right? You want to let your money compound. So if you can get your money compounding at a decent rate of return while keeping your risk at a tolerable level, that is a pretty good spot to be in. That's exactly what we do here at Theta. So imagine you get paid a lot of money just for agreeing to buy some of the best companies in the world at a discount. Think of that. Now, I know it sounds weird. Think of it again, okay? Imagine you get to buy the companies that you want for less than they're trading for, and someone's going to pay you for it. Is that a deal you'd take? It's a deal that I take all the time. That's the backbone of Theta strategy, okay? Here is a real estate analogy for any of you real estate investors, okay? So imagine we go to Fantasyland, Ontario, and we see a house for 500,000, and we say, okay, yeah, the current market value is 500,000. Yeah, we're about right. And we do some homework on the property. We do some homework on the area. We think a year from now, the property will be worth 550,000. That is our homework that we do prior to even making this investment. It's the same thing we do on the stock side. We'll look at a company. We'll say, do we want to invest in this company because we think it'll be worth more in the future? Okay. That is the first thing that is required. Without that, we have nothing. But here's the cool part. Now, the house is 500,000. And I go to the homeowner and say, hey, homeowner, I know your house is worth 500,000. You know it. I know it. We all agree that it's worth 500,000. But it's a choppy market. How about I do this? How about I agree to buy your house for 490,000? So even if it goes to 480 or 470, I'm going to guarantee you $490,000 for your house. I'm going to guarantee you for the next 30 days, though, not more than 30 days, just for 30 days. I'm going to guarantee 490. Okay. And homeowner goes, I'm going to say homeowner, but for me guaranteeing the buy price of your home for $10,000 less than its market value, I want you to pay me $10,000 for 30 days. Now the homeowner is going to say to me, listen, lunatic, get off my property. I'm going to call the police. That is what will happen if that was a real estate transaction. Now you cannot do this in the real estate world, but you can do this in the stock world. And like I said earlier, 99.9% of people are simply not aware it even exists. Okay. So in this scenario, either the home goes below 490 and we have to buy it, which we're happy with because we think it'll be worth 550. So we certainly don't mind buying for 490, or it doesn't go to 490. Either way, we keep that $10,000. It's a pretty good spot to be in. The worst thing that's going to happen is we own this house. Well, we would have owned it anyways. So we're pretty happy with that. So it's a win-win situation for us. Now, this is an example of a company, Microsoft. Okay, I'm sure everyone's heard of it. In fact, I've been in this PowerPoint presentation, Microsoft. Okay. Now, the first thing we do is we do our homework. We'll see, okay, is Microsoft earnings and their profit is increasing year by year? What are their future products and services that are coming out? Is this a company I want to invest in? The same thing that we would do when we're investing in a real estate property. We look at rents, we would look at expenses, we would look at all that stuff. Same thing. Okay. So now, we find a stock we want to own. In this case, it's Microsoft. And that's not meant to be stock advice. It's simply saying, as an example, okay, this is just an example. We do extensive research on that particular company. And we say, yeah, we want to invest in this company long-term. So the next step is, and that, by the way, is the most important step, is the first homework. Because the worst case situation is if you own a stock you want to own, not such a bad place to be in. Secondly, we agree to buy that stock at a discount. I'm going to show you a real-life example. And we get paid something called a premium. We get paid a bunch of money to have to buy the stock because we've guaranteed to buy it. But we don't mind. This is called a naked put. We may have to buy the stock, we may not. But we're happy with the worst case scenario here. Again, this is called a naked put. Weird name, I know. If you want to learn any more about it, you can hit us up on our YouTube channel, Theta Trading. I've created a lot of videos on this. And this, if you want to look more into this concept, okay? All right. So here's a real life example naked put, okay? So Microsoft's trading at $241 today. This is real life example, today's example, okay? And we say to ourselves, we've done our homework. Well, we think Microsoft will be worth about $300 a year, okay? We think it'll be worth more. It's, their cloud division is increasing substantially. Their Windows division is still very profitable. Their Xbox, et cetera, et cetera. We've done our homework, okay? They bought a company called Activision Blizzard. Okay? Again, that should help be accretive to earnings. It should help them make more money in the future. So we say first, we're happy with a worst case scenario owning Microsoft. That is the first step we say. Then we say, instead of buying it for $241, we're going to agree to buy it for $230, but we're going to guarantee a $230 buy price. That's a $4.85 discount. I mean, 4.85% discount, excuse me, okay? Just for agreeing to buy it, we got paid $3.87 a share. Think of that. That's like 1.6% for a month, just for agreeing to buy Microsoft for almost a $12 discount. If you're going to pay me a bunch of money to buy my favorite stocks for cheap, where do I sign up? So this is the strategy that I used to be able to get myself in a position of financial independence. And it does require discipline. It does require a lot of work, but it can be immensely profitable if done correctly, okay? Now, during the next 30 days, one of two things can happen. Either I'll have to buy Microsoft or I won't. Either it'll go down to 230 or less, or it won't. Either way, I'm going to keep the $387. That's a 1.68% return. It's over 20% a year, annualized. It's a pretty good rate of return. Now, going back to what Einstein said earlier, you know what you can do at 20% a year if you're able to compound that for an extended period of time. So if we have to buy Microsoft, what happens? We got paid the premium and we got to buy Microsoft at a cheap discount, okay? Either way, we win. So you might be asking yourself, what happens if we have to buy Microsoft? All right, let's take a look. So here's Microsoft, $241. We agree to buy it for $230. And the market pays us $3.87, okay, per share. Great. Now, I think Microsoft won't go below $230, and we don't have to worry about there's no further obligation on our part, and we keep the $3.87 a share. Now, if Microsoft does go and stay below $230, well, we will have to buy Microsoft again. We've done our homework ahead of time, and we certainly don't mind buying Microsoft. That is the key, okay? Now, we can hold the stock because we think it's going to be worth $300 a share, right? We've done our homework. We can collect a dividend. That's our portion of the company's profits, and they do pay a dividend, and possible appreciation. We bought it for $230. We got paid $387, so we really bought it for like $226. We can hold it till it hits $300. We're happy to hold it because we've done our homework, right? There's confidence. And that's what investing is about: knowledge, confidence, application of that knowledge. Or here is the other cool part of the strategy. We can turn around and we can agree to sell our Microsoft shares for $245, okay, a share. Now remember, we only paid $230, and we got paid $3.87. Now we agree to sell our Microsoft shares for $245 for 30 days, and we got paid $7.55 a share. So what I'm saying in this scenario is, you know what? If Microsoft goes above 245 next 30 days, I'm okay with that. I'll take the 245. Even if it goes to 248 or 250, I'm only getting 245 maximum. But I got $7.55. So I'm really getting more like 252. So not only did I get paid when I agreed to buy Microsoft, I'm also getting paid to agree to sell Microsoft for a profit. And let's say things go really bad like they did this year. And it'll happen every so often. I've been investing for 25 years. I've seen it 3 times: 2000 to 2002, 08, 09, and now. Okay, it's the 3rd time I've seen a prolonged bear market like this. The great thing is, the worst that'll happen to us, as long as we're not leveraging ourselves, is that we'll own a company we like. So oftentimes our job is not to lose money. That's our first job. Now, it's great to make money. But even if the stock market takes an absolute beating like it did this year, and my worst case scenario is I own Microsoft, yeah, it may be down, but I think it'll be worth a lot more. And Microsoft, by the way, guys, if you want to know, just out of curiosity, 10 years ago it was like $25 a share. So it's a company that's continued to grow, and I invest in companies that I believe in the long term. So I don't mind holding these stocks if I have to as a worst case scenario. The thing I don't want to do is I don't want to lose my money. So here's another way to make money. Now, this is called a covered call. I'm going to agree to sell my Microsoft shares for $245. I got paid $7.55. Now, if Microsoft doesn't go to $245, well, guess what? I keep the $7.55 and I keep the shares, and I can agree to sell it again next month and get paid all over again. Or Microsoft goes above $245, in which case I have to sell it for $245, and I still keep the $7.55 a share. And like I said, throughout this whole scenario, the worst that'll happen to me, as long as I'm not borrowing money, is I own Microsoft. Well, I've done my homework and I'm more than comfortable with that. That's me. Okay. So here's an overview of the strategy. I got paid $3.80 when I agreed to buy Microsoft. Okay. That's a 1.68% return in 30 days. Now, we might get paid a dividend. And, you know, you get paid a little bit of money just because you're a shareholder. As long as that company's making money and they pay a dividend, well, you get paid most often every 3 months. Okay. This will increase our overall return. Now, we can do the other part of the strategy, again, where we agree to sell our shares for more, at or more than we bought it for. Now, we bought it for $2.30. We're agreeing to sell it for $2.45. And here we got paid $7.55. That's a 3.08% return. Again, in 30 days. And if we choose to hold Microsoft, we could also get capital appreciation, because if it hits our target of $300, well, we only paid $2.30, and we got paid a lot of money on these premiums. So, you know, we're pretty happy either way. And like I said, the worst is happening to me is I own Microsoft. That allows me to sleep all night, even in recessions. I've been through them, but this requires a lot of learning and discipline. Okay. Now, the S&P is down about 17.5% this year. It's been a horrible year. Normally, you don't have years that are this bad, but you do every so often, and it happens. That's the way it is. But I would rather be in a position where I can simply hold it. Now, that's this 1 year, okay? Now, look at what history tells us, okay? This is going back to the early 80s, okay? You can see from time to time, the stock market does take a nosedive. You can see, I told you 01, 02, 08, 09. You can see here in 2020 and again now, but look at the overall trend. Overall, it's up 2,800%. And that's a lot, big return. So it's averaged about 10.9% a year for the last 50 years, okay? That's a pretty good, last 42 years. That's a pretty good rate of return. So the odds are heavily in your favor that the markets will go up over time. So if I'm in a worst case scenario where I own my stocks, even if I have a bad year or two, well, I just own them. I don't have to sell them. I can wait it out. I can write some covered calls. If I don't want to lose my money, that's my key here. But there'll also be years where the market goes up and up and up and up, and you can make an absolute killing because you're collecting all these premiums. But the safety mechanism of this is, even if things get really bad, well, I've got my shares, I can hold them even if they're down. It shows you what a long-term opportunity the market presents when it goes through one of these major bear markets, at least historically, okay? Now think of this as a 4-course meal. First, naked put, I told you, agree to buy the stock at profit, at a discount, you got paid for it. Second, collecting a dividend, okay? Our portion of the company's profits. Again, we can agree to sell our shares for at or above where we agreed to buy it for. In this case, $245 a share for Microsoft. We got paid a lot, $755 for that. And of course, capital appreciation. And the worst thing is we own the stock, right? So forget about everything else. If you just look at that return in 60 days, it works out to about 28.56%. Now you'll have periods of time like that where you can do that, you know, all year long, and you can do it for years on. At least I have in the past. And then every so often the markets get pretty bad, and I have my stock, and I'm able to wait it out. Hopefully, I use my real estate to be able to average down and buy stocks when they're cheap. But the cool thing is, to learn this strategy, you have a lifelong skill set. You don't have to start. Excuse me, like I said, I'm a little under the weather. Now, you don't have to start trading right away, but it's important that you educate yourself and learn about this, because one day it may be your main source of income, right? It's just you and your phone. That's all there is. You know your worst case scenario. Oh, I got to buy this stock. Okay. There's not a lot of work involved. The work comes in analyzing companies, understanding those companies. And if you don't want to do that, well, you can invest in the entire market. You can say, look, I don't want to learn about any companies. I just want to invest in the whole market. Well, you can do that as well. The idea is to learn how to benefit from this strategy, because if it's done right, it can be very, very profitable. Now, this is Warren Buffett, one of the most conservative investors in the world. Now, he runs a company called Berkshire Hathaway, and they have annual statements because they're a publicly traded company, okay? Now, we don't know for sure what he agreed to buy here, but you can see a line item on their balance sheet that says derivative contract liabilities. Well, Warren Buffett's company, Berkshire Hathaway, is one of the biggest shareholders of Apple in the world. If they want to buy more Apple, do you think Warren Buffett's going to wait for the price of Apple to go down, or he's just going to agree to buy it for the price he wants it and he wants to get paid for it? Well, we don't know for sure, but we know that he collected a lot of premiums, 2.4 billion, in fact, in 2018 and 968 million in 2019. Those are hefty premiums. Okay, so there are a million and one strategies when it comes to options, and I have tried them all because I learned through trial and error. Okay, we stick to this one strategy because it gives us the most amount of return for the least amount of time spent and the least amount of stress. Okay, so this is a Bruce Lee quote that really goes down and hammers what we do here at Theta. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. We don't show you 10,000 strategies because many of them can lead to permanent losses. They're very time consuming, and we've done them all. Now, there are lots of strategies in the options world. We stick to this one strategy, but we go and learn it and we practice it 10,000 times so that we're very understanding and comfortable with it. Because I would want my worst case scenario to be that I own a stock I like. Okay, I can handle that. Now, the strategy, like I said, is pretty powerful. I only trade about 10 to 15 stocks. You can trade more, you can trade less. That's not the point. The point is education here. And why doesn't everyone do it? I don't know. I think the thing is most people just don't know about it. It comes down to knowledge and application of that knowledge. As Warren Buffett said, the more you learn, the more you earn. Okay. So I want to share about what we do here. Like I said, myself and Matthew have been trading for almost 50 years, investing for almost 50 years. We're going to show you all the lessons that we learned, why the strategy works for us, and we're going to take you from knowing nothing to understanding how finance and options and this particular strategy work and how you can use it for the rest of your life. Okay. So we have one goal: to help people achieve financial freedom by teaching them the foundations of investing through knowledge and confidence. Okay. If you want, take a look at our Google reviews. We have quite a bit of them. You'll see what people have to say about us. So whenever you get a chance, thetatradingco.com. That would be, and just take a look, man. Read them out for yourself. Maybe you might know some of those people. Take a look.